All right, welcome. Happy Wednesday. How are you guys doing? We have Facebook, YouTube, Instagram. If you don't know me, my name is Kiwanis. If I'm to be looking around a lot, it's because I am on multiple devices as usual. My name is Kiwanis Rucker. I am the owner of KMJ Financial Services, where we specialize in credit repair and tax preparation. I have an MBA. I'm also a board certified credit consultant. I am your favorite podcast host of the Credit Refresh Podcast, where we have wrapped up season one. There are 13 episodes in season one. So if you haven't listened, go and take a listen wherever you listen to podcasts, Apple Podcasts, Spotify, Pandora, wherever you listen to podcasts, you can catch that. If you're watching the replay, make sure that you type hashtag replay gang in the comments so that I can see you. Let's get into today's topic. Today we are talking about what an itemized deduction is. On Monday, we talked about standard deductions. If you missed that, you can definitely go back and take a look at that. So a standard deduction is where you take the deduction to reduce your taxes that you owe the IRS, and you take the deduction that the standard deduction that the IRS gives you with no questions asked. So let's talk about what itemized deductions allow you to do. You can claim a larger deduction than the standard deduction when you itemize. However, it does require you to complete Schedule A when you file your taxes, and you have to maintain records of all of your expenses when you itemize. So when you itemize, there are a large range of expenses that you can deduct if you have them, like your mortgage entry, interest, any state or local income taxes, property taxes, any medical or dental expenses, large charitable donations. So like if you donated a car to a charity or something like that, you can itemize that. If you have any gambling losses, those are also things that you can itemize. Now, although using the standard deduction is easier than itemizing, if you have a mortgage or a home equity loan, it is worth seeing if itemizing would save you money. So the itemizing requirements are, in order to claim the itemized deduction, you must file income taxes on the 1040 and list all of your itemized deduction on Schedule A, which I already talked about. So you would enter all of your expenses on the appropriate lines on Schedule A. You add them all up, and then you total them on the second page of the 1040. Now, the amount that is subtracted from your income, that's going to be your final taxable income. So how do you decide whether you should itemize or if you should just take the standard deduction? When you're deciding to itemize, you want to keep in mind that you are giving up the standard deduction, so you can't do both. You can't take the standard deduction and the itemized deduction. You have to decide on one. So when you add up your itemized deductions, you want to make sure that your itemized deductions are greater than the standard deduction amount. If they are not, you should definitely just do the standard deduction because it doesn't make sense. You want to get the biggest deduction that you can get. So I hope that this gives you a little bit more information about what a itemized deduction is. Again, if you need to know what a standardized deduction is, make sure that you go back and watch our live from Monday. I'm also doing free consultation calls. So if you have any questions about your specific situation, you can definitely get on my books and schedule a call with me. There's also I have a free tax prep checklist, and for the business owners, I have a free business guide. So you can go to bookwithkiwanis.com. That is bookwithkiwanis.com, and you can check out all of those free resources. Now, I want y'all to meet me here on Monday, the 19th, same time, same place. We're going to do our 10-minute tax tip, and we're going to talk about what your filing status should be. So until Monday, you guys be safe.